All right, what is going on, Discord family, and welcome back to another edition of Market Review with me, t.hobbs. Today is February 5th, 2024, year of our Lord. Wait, is it 2025? 2025, year of our Lord. And man, the market finally broke out of that consolidation that we've been in for about, I don't know, 2 days, a day and a half, something like that. And I made a couple mistakes today. I'm definitely going to speak on it. But ultimately, the question you always got to ask yourself, but did you make money though? Right? The mistakes that I made, I caught them early enough where they didn't lose me that much money, right? And I ended up being more green than I was red on the day. So ultimately, I did make money, right? But I just wish that I definitely saw the market a little differently. I'll break all of that down into the pre-market plan in relationship to the pre-market plan, and then we will get started. And then we'll review the S&P 500 and the NASDAQ as well. It starts over here with my bias, right? Every day I come into the market, I don't necessarily know exactly where the market's going, but I always have a bias on where I think it can go, right? So the current conditions where we were in this tight consolidation at the high of the retracement, right? So this was the bullish retracement of this bearish trend down, right? So my thought process was that this was bearish. I was looking at this consolidation as, hey, we'll sweep these highs and then go down and take out the lows, right? So I was looking at us being bearish as long as we stayed below 744, right? I was looking at us being bullish as long as we stayed above 43,964, which was way down here, right? And then macro, I said we have been sitting in consolidation for over 24 hours, and bulls have yet to break out, which is leading me to believe that the high of the week may be in. I will look to trade the range at the extremes, but my bias is leaning toward being bearish, okay? So I had already baked in like an initial bias, right? Like, hey, we were all the way up at these highs to start the day. I wanted to look to short the market, which wasn't the incorrect thing to do, right? There was the distance in which I wanted the market to go, which was the incorrect part, right? But the range, we was looking to short the high and lows of the range. The high was 44,744, the 44,744 through 692, and then the low was 612 through 523, right? At the high point, I was looking to short weak rallies into the daily supply. I just drew this 4-hour supply zone when I was charting earlier. I want to see how the market reacts to it inside of Tokyo and London, right? So, and then to the extreme lows, none of these gotten hit all week, which should have been my red flag to say, hey, dummy, if we're not coming back to the lows, these extremes, and we're consolidating up here and we're not pulling back, we're probably not trying to go lower, right? We're probably trying to go higher, right? So let's come down to the lower time frames and let's break down price on the lower time frames, because my plan worked very, very nicely, right? It's just that I'll share with you guys some of the mistakes that I made. So if we come down to here to the 1 minute chart, I want to start with macro time, right? So let's come over here, turn these on. Okay, let's come over here. So what I did this morning, right? The first mistake I made, I was sharing with Yoga before we started. The first mistake that I made was when I went short the first time. I was short 708, 44,708, which is right here. It was a good entry, decent entry, right? I was trying to be cute, right? And I was like, well, I'm just going to risk 724. It's some of the old habits that I used to have, right? The reality is the invalidation point was way above this candle here. It was 744, right? And then I could have gave it an extra 10 points or so. I didn't get anywhere near that. So of course I got stopped out, right? That was my first mistake. Price started to come down. It came all the way back up and stopped me out. But I stuck with my bias up here and I got back into the market short, and I got short 724, which was a much better entry. And then I put my stops above this high. This is normally my entry anyway. I usually like to wait for this dip to happen and then the sweep of this high and then get short on this right shoulder here, right? So I ended up getting my actual entry. I felt way more comfortable in the trade. My first profit target was New York AM session. I was in 2 minis. I took one off here for like 50 or 60 points. And then when we came all the way down, my second mistake was my overall target was 44,589. And instead of taking everything off at this level, I got greedy. And instead I dragged my my runner down to 128, and I should have just taken the 160 and ended up getting stopped out for the 128. And that's kind of what led me emotionally to believe that I left more meat on the bone, right? So instead of reevaluating price, realizing that we traded down into 950, right? I decided to take another short here, which again, with my bias being to the short side, it wasn't a horrible idea, but I never short at the low. I always short at the high. So that being said, that's another rule break for me, which is another mistake. However, the question you always got to ask yourself is, did you make money? I did not on this trade, but the setup was perfect, right? I was in profit and I just didn't take the money. I got short 602, put my stop above the weekly fib at 621. Great stop loss, in my opinion, because I didn't want to give it this high here. My thought process was, if I'm right, then we don't need to be trading back above the weekly fib. And as you can see, we rejected the weekly fib, then we got back on top of it, and we never saw this level again, okay? We ended up dropping down. My problem was that I was up 140 points on the trade, and I didn't take anything, right? I actually ended up losing on this trade and getting stopped out for a 20-point stop loss, right? After that, I got done trading, right? I was like, I'm good. And then I ended up taking a trade on S&P because I'm just me, right? And I'm going to show you guys that trade when I get over to the S&P. But the pre-market plan, we were looking to short the highs and long the lows, right? And that's when I realized that in my brain, I stopped and I was like, hold up. If I'm getting short down here, I'm going against my pre-market plan, right? The number one thing that I'm trying to drill into my brain is, if I take the time to write a pre-market plan, then I need to follow that plan. Today, I followed the plan once. I followed the plan twice, right? But I did not follow the plan the third time, because there's no way I should be looking for shorts down here. If this market bleeds, it needs to get through the previous day low and then come back up and retest these. And then at that point, now I'm validated to look for shorts off the break and retest. All right, so as we continue to trade down off 950, we trade back up off 950 into the 1025 macro. And this consolidation at the highs was brutal. I believe we stayed up here from 1042 to we finally broke out at 1131. So for a full hour, we were up here just dancing around. I'm gonna give you guys a little nugget in this market review, right? Because I see it all the time, right? Pippi and I discuss it a lot, right? So when you see the market come up to a high, right? When the market gets up here, right? And it does this little dance, you see all these little wicks up here, it pushes up, all that shit, and then it sweeps down and it pushes up. Don't fall for this by trying to short the market. All the market is doing up here is inducing sellers. That's all it's trying to do. Or it's inducing late buyers and early sellers. That's all it's trying to do. The late buyers, they try to long the highs and they get smoked. The early sellers, they try to short the lows and they get smoked, right? And then the breakout traders try to long the highs and they get smoked. And now the breakout traders to the downside try to short the lows and they get smoked. The way that I identify this is zooming out and looking at the entire uptrend on a higher time frame, right? If you zoom out, right, and you look at like the 1 hour or the 4 hour, and you just look at this wick right here. You see this wick right here? This is a 10 o'clock wick. We swept all of this buy side liquidity, came back into this range right here, and now we're at the absolute high. So you got to ask yourself, is the market looking like it's about to start a new trend? The answer is yes. So if it's going to start a new trend, what does it need to do? This 1 hour needs to close, and this next 1 hour needs to get above this 1 hour. So which one is more probable? The market coming all the way back down to this wick and letting all of those people they just trapped out of the market? Or is it more probable that it's going to sit up here and try to trap everybody, right? When ultimately it's just trying to go higher, right? So that's just a little nugget that I wanted to drop on you guys, because I know sometimes price gets up here and the first thing I want to do is like, oh, we're at the top of my range, I'm going to go short. Like, nah, that short shit dead. Once we swept the low, it's over. OVA. No reason to look for shorts after that. They did, right? Me and Justin was trading this shit early. I tried to short on the S&P 500. I got stopped out so damn fast and make your head spin, right? And ultimately is because we consolidated. The longer we consolidate, the longer that consolidation period is, the more powerful the expansion is going to be. This was almost a 600 point move and counting. Even even in the after hours, it's still going. Why? Because we consolidated here forever. We were in this consolidation since Monday, right? Since we came up on Monday, we really didn't have any movement other than consolidation. So you just got to understand that that expansion is going to be powerful and you don't want to step in the way of that. Anyway, as we continue to follow price, time, and structure, right? We look at 1 p.m. session. I really think that if you guys haven't paid attention to this macro from 110 to 140 or the opening time frame for PM sessions, not necessarily a macro, but if you're looking between 110 and 140, guys, this is how I draw my chessboard every day. So if we're trending up, right, that automatically eliminates 110, usually eliminates 110 bringing the high, right? Because I'm guessing the trend is going to continue. Therefore, that means 110 has to bring the low of the PM session, right? And 345 should be bringing the high. That means that theoretically, all you need to do is see us trade down into 110. And once it recovers and retests, or you can get it all here, but once it recovers and retests, you can take longs into 345. Just hold it until 345. At 315, 345, get out of the trade, right? Because it could retrace back down to here, right? But don't take my word for it. Do me a favor and go back test it, and you'll see exactly what I'm talking about. Anyway, let's move on to the S&P 500. S&P 500, and I did not write a personal plan for it, but my man Jay Seals put together an absolute saucy plan for the S&P 500. Said it was another inside day yesterday and potentially opening up inside again. Yesterday, price failed to get above the previous day high, and overnight we sold to a little more than 50% of its range. Essentially, that means we're very bullish, okay? If we can get above London high at 6040.50 and retest, I will look for longs back to the top of the range at 6069. If we fail at London high, I will be looking for London low to hold at 60.2025 and double bottom to go long, first targeting London high and then the previous day high. Bearish, if we break London lows and retest, I will look for shorts on the retest of the bottom of the range of 59.87. Essentially, if you guys aren't following all of that, if you look on the chart on the 5 minute, right, all he's saying is 60-40 is his line in the sand, right? This is 60-40 right here. He's looking for the market to break it, fail, come back above it, and retest it right here at 60-40-50, right? Once we retest it, you should be in the market long, targeting 60-69. That's it. That's all he's saying, right? Had the market fail and broke below 59.87, I guess, daily fib down here, then he was looking for shorts. I wouldn't have waited this long to look for shorts, but that's how he was looking at the market. Essentially, he was looking at the market as bullish because the bearish plan really didn't. The market had to get so bearish in order for his bearish plan to play out that the bullish plan was damn near the only plan he was looking for, right? And that's kind of what he said when he came into the market, right? So if you look at this setup, there's a couple things that I add to this, right? For me personally, right? How I view the market. We had true day down here. So this red line right here is midnight, right? If you guys don't know, one little rule of thumb I like to live by is below midnight, I'm looking for longs. Above midnight, I'm looking for shorts, okay? Until the market gets to trending, right? At that point, then you got to follow the strong uptrend. So the market 950, the S&P needed to trade down for me to go up, right? Once it broke below midnight at 6037.50, reclaimed the in wall between 6036, right, and 6027, tapped right into 50% of that, right, at 6032. And then we got back above 6040, which was Justin's level, right? We got above it and then came back down and retested it. This is the long opportunity right at midnight or 50% of it. However you view this entire cluster is where you want to get long, right? Then if you don't take the longs here, 1025, you trade down. We're looking for longs all the way back up. Again, I ended up taking longs. I was done trading, but when I came back, I saw this setup and I just couldn't ignore it. The Dow Jones was way up here. The S&P was down here, and I had a fresh combine that needed to get some action to it. So I was like, all right, bet. Let me throw this combine on. This is a perfect trade. When I came in, I got long 60.47. Then I got another one at 60.48, and then my last entry was at like 60.51 as we were pushing out, which made my entry come to a total of like 60.50. and my target was the top of this range up here, 60.68. I think I hit the profit target on the day before I hit my total target, but it worked out. It was a great trade. Initially, I took the longs. I'm not gonna lie. Initially, I took the longs off 60.49 over here with 3 minis. It went all the way up to the high. I was up like 1,200 and took no profit. When it started to come down, I saw this basing candle. I was like, all right, I'm gonna cut it. So I cut it for like, I don't know, $300-400, gave me a little bit of cushion, and then I got in on this side of price. So anyway, point being, guys, if you need any help, if you need any assistance with following price and you don't understand anything that I'm talking about, come to some of these sessions, ask some questions. There's plenty of people in the chat that can help you out. But let's switch over to the NASDAQ. I don't think anybody wrote a plan for the NASDAQ, so we'll just do it real quick, briefly review it. My computer's kind of frozen here. That's weird. Okay, whenever you want to let me get to the NASDAQ. All right, there we go. Okay, with the NASDAQ, if we come down, we just review it really quickly on the 15-minute, right? The setup was basically the same for everybody. The beauty of the NASDAQ is that I would have probably done better, quote unquote, if I took the London entry off the NASDAQ, right? Because this is something that I'm learning about all three of the instruments. They develop differently, right? I mean, I know they all develop differently, but like the setup is different. So like, I really like taking the London trade, but if my instrument is in consolidation, while this instrument is in a downtrend, this is going to be the better probability of catching the low of the day, because inside of consolidation, the market will bounce back and forth, and this may not be the low or the high. It'll just be like, you know, it'll be consolidation. But because the NASDAQ was already in a downtrend, it was a really good entry inside of London. That is something I'm going to add to my repertoire of things that I look for in regards to trying to find the low, because I'm trying to hold one trade all day, right? So I just got to make sure the setup is there, right? But anyway, we were at the lows down here, and then, you know, we rallied, got above New York open, we bounced, got this doji candle at 10 o'clock, and then it was just off to the races, right? Everything followed the plan, because if you were looking to PM session lows, once we got up in here, we held the PM session lows, got back above midnight, tested it right there, it's 561, and then rallied right to the PM session high, got a break and retest off the previous day high, and now we're rallying into Tokyo and London, which is exactly what I anticipated, because I'm actually looking to get short tomorrow, right? So I need to see the market rally inside of Tokyo and London. I want to see us continue to push higher so I can look for shorts tomorrow. That being said, the volatility index is just failing us as per usual when the bulls take control. But that's all I got for the market review. My name is T.Hobbs, and I'll catch you guys on the next one, man. Peace.